Welcome back. You're with us on Corporate Trader. We are tracking, of course, a lot of the corporate commentary, and we're focusing on GST really today and what that is going to mean for the consumption sector. The next company on our radar is Akzo Global. Mr. Rajiv Rajgopal, Chairman and Managing Director at Akzo Nobel, is with us. Mr. Rajgopal, thanks so much for joining in. Of course, focusing on three key points, we definitely want to understand what your interpretation is of these GST cuts and what it really means for the paint sector. And then, of course, we're looking at the company's strategies of tackling intense competition in the market. And, of course, want to get an update on the integration with JSW Paints. So thank you very much for joining. And actually, let me start with the last point first, because, there is a lot of, corporate change in the works now. It's been a little over 2 months since the deal was announced. So where are you? If you could just understand in terms of the integration, any change in employee structure, and have the talks on strategy really started in terms of what the strategy of the entity is going to be, which kind of gives us a segue into the other question as well about heightened competition in the paint space.
Morning, Surabhi. Morning to you, Nigel, Prashant, and to all the viewers. Thank you for having me on the show. Coming to the JSW integration, it's very early days, as you would understand. We are right now under CCI. So from both ends, we have certain limitations on what we can do, what we cannot. What's allowed is to look at the structures, etc. The current view is that, look, at this point of time, we intend to keep the two, and this is what Mr. Park Jindal has categorically stated, that, look, we intend to keep the two organizations for a period of time, 2-3 years, running separately, understand how to really integrate it well, and then start moving on the integration. So that's what has been outlined. But the tracks will really start once we get the CCI clearances, hopefully this month or early next month. Once that starts, then some deeper conversations will come in, Surabhi. So it would be a little early for me to really comment on it. I think it's best that Mr. Park Jindal talks about it. And I think we would be in a better position to really talk about it sometime around November. December is, in my view, the most optimal time.
All right. Rajiv, hi. Good morning. Prashant here. So you can, when we can't do too micro, we can go a little macro-ish, but still numbers, I guess. So you said, right, 2-3 years, and of course, it's going to be work in progress, and it's only the broad outlines, a couple of years to be run as separate businesses, and we will see how it goes. But the big numbers, what are you talking about? What are the numbers being talked about internally? Where would, obviously, JSW would want the business to gain a lot of market share. You've got super brands, but market share, of course, has been relatively small in that sense. So you'd want to leverage that. So from 4-5% currently, where would you, what's the number internally? Where would you want this number to go, over the next 3-4 years?
So, Prashant, very clearly, I think you're absolutely right. I think the first task is to really scale the company up. And the brief is to say that, look, let's try and scale the company and do it in a manner which is structurally right, which means that, it's not a blip and then you again run into an issue. So strategically put the roadblocks. And you're right, the three levers of that is going to be around spending more on the brand. You're seeing that. We've already started it as we speak. Just a few days ago, we've just announced our Dulux Assurance 2.0 or 3.0 actually, with Lage Shandar, a campaign that we've Chale Shandar, Lage Shandar campaign. We were the first to come with that, and really that's our first to remind viewers that, look, I think our paint has got the best quality, undisputed. This is what consumers, dealers, and painters say. So really, how can we really scale it up? And the target there is to really start seeing how quickly we can move to the number 3 position. So that's obviously to take it to about 7.5% really, and then try and then build it, as a paint and coating company to say how can we in the next 3 years start targeting the 10,000 crore. I think those outlines were already stated to you in July to both you and Nigel when Mr. Park Jindal sort of addressed the gathering, and we are very clearly going to be working on those targets to make sure that we lift the brands in terms of scale. The challenge for us, Prashant, has been that obviously when, given the way Akzo Nobel runs its portfolio, was that we were largely premium focused. And you're right, there's a huge amount of goodwill that Dulux enjoys, and we are under leveraged in the mass economy categories where, they are largely representative. Mass economy constitutes about 35% of the paint market, and we've got about a 1 to 2% market share. So really, how are we scaling that up? And that's where we're really working on. We've entered very well into a waterproofing segment. Our products are fantastic. We are now going to enter the construction chemical segment in a meaningful manner as we start playing around. But the brief is to say that we will not leave any category and we will not leave any consumer segment or customer segment or price segment moving forward. So that will give you a idea of across both the paints and coatings business, how we as a team are gearing ourselves for the time ahead.
Got that. So immediate revenue market share target of close to 7.5%. And maybe move to about 10,000 crores, as you had pointed out earlier as well. Rajiv, this is Mangalam here. Just wanted to know, a couple of more things as well, because Mr. Jindal had said that time that they see immediate revenue synergies once both your stocks are in each other's supply pipeline, could be anywhere between 700 to 1,000 crores. The additional elbow room that they get for, marketing, close to 350 basis points as well. And I saw you speak about, your warranty. Warranty has been the big buzzword over the last, I think, 2 or 3 months, ever since Birla Opus came out with their, 1-year repainting warranty thing. Then the Asian Paints came out saying that we're here for more than 1 year. So obviously our warranty lasts beyond that. And then there is competitive intensity, which is fairly high. So how's that in the market right now? That's one. And secondly, on the GST part, while there was no explicit announcement for the paint industry, do you think when you look through the fine print, there have been some changes or reduction in other aspects would leave more money in the hands of people, and as a result of which they would go back to painting their houses? How should one look at it?
Yeah, so to your second question first, yes, the answer is GST. There has been no direct impact because paints was already at 18%. But as you've been sort of saying, I think the first thing is it went first to, it's good that the essentials have got corrected, which gives more disposable income to discretionary. And as a result, we do think that paint will be a beneficial for this entire segment. Remember that this, if you look at this quarter, and if we're starting from May, there have been heavy rains. I understand even today, Mumbai has got heavy rains, right? Yep. So I think the painting cycle has seen a deferment. You should know that this quarter, Diwali is on 20th October. So as a result, this season is quite a truncated season. But when I work the markets, when I've been traveling across, what I see is we're going to have a fantastic Q3 and Q4. So to my mind, consumption should come back. The reason is the last blip really happened in 2022. And remember, the painting cycle typically for exterior is about 4 to 5 years, and interior is 3 to 4 years. So you are right now sitting in that sweet spot between this year and next year, when a lot of the places that went for painting will come for repainting, and we are positioning ourselves to sort of gear for it. Yeah. Coming to your first question, look, it's a little early days, Mangalam, and I think this is an ongoing conversation that we will have because, look, we've got to go through the nuggets of the integration plan. As I said, we need the CCI. The broad numbers you gave are indicative. We'll need to get into the nuggets, but you're right. Look, I think there are two different models that we have in our sales system. Akzo's moved into a distributor system. JSW Paints is a direct system, and there is a lot of value unlock. Once we agree to what the strategy is, there's also going to be 60% of our consumption is raw material. And I think the benefit of the combination will give us scale, and we will relook at some of the terms we have and see which company has got better. There will be a little bit of value unlock in some of those activities, and also try to make sure that we get closer to our customer. I think the first task is to mentally make that switch, Mangalam, which is to say that, look, we are no longer just going to be a premium brand, but we are going to be now addressing all consumer segments. It's about winning the micro battles in India. Right. And it's about saying, because, each segment operates very differently. And it's fantastic. I think it's exactly what I think the brand Dulux wanted, which is the reason why we went in for this.
Right. And we take that point entirely, Rajiv. We take that point entirely, and I think we'll require you to join us. We request you to join us once the CCI approval comes in, and then you'll have more clarity on what you can speak about and what you're going to do going forward, etc. But just on the point of the next 2 quarters looking extremely strong for you. Before, we spoke after your first quarter numbers, you said you're at least targeting high single-digit growth this year. And if all things are good, you're looking at double-digit. Between that to now and the optimism that you have for the next couple of quarters, do you think that optimism has moved from high single-digit revenue growth to double-digit, or you still are maintained at high single-digit?
No, I would maintain a single-digit growth right now. The simple reason being that, when I travel, I still think there is a little bit of lag in terms of the consumption that I see. What's happened is some of the new entrants have obviously taken share from the existing ones, which is evident when you look at the quarterly results. We had a bit of a blip last quarter, but I'm glad to say that, I think Dulux is back. I think with the entire strategic review and now JSW being announced as a winner, very clearly there's a lot of positive feeling in the market. We are getting super aggressive because that's the task that we've been given, and I think it'll take a bit of while to really make sure that the flight takes off. But I am fairly confident that going forward that the single digit can be converted because we believe that we've got the right the mix, we've got the right strategies in place, and it's about saying we need to find chisel certain areas that we need to find.
Absolutely. And we look forward to that conversation after November, December, Mr. Rajgopal, like you said. Just in the extreme near term, because you mentioned rains, will Q2 this year be worse off than last year Q2 just because of the incessant rain? You mentioned, the impact obviously on the timelines getting deferred. So in the extreme near term, has there's been a washout season because of the heavy monsoon?
Look, I can compare it, Surabhi, to last quarter, and it'll be better for us than the last quarter. But from an industry perspective, I think it'll be quite similar to the last quarter primarily because of the heavy rains that happened in August, September. But again, monsoon has started retreating in the last few days in certain parts of the country. So we'll see. We are going to put our best foot forward. But suffice to say, I think it'll be a little better than the last quarter, but not dramatically different.
Sure. So last quarter of last year, you mean? Year on year, it'll be slightly better than the last season.
I was talking of the first quarter.
Q1.
Quarter. Yeah.
Okay, it'll be slightly better than Q1. Got it.
Better than Q1, but it will not be dramatic because, still remember that on the profitability side, we've also had the ad, which has got on the TiO2, which has taken a bit of sheen on the raw material pricing. Yeah. That said, I think for us, we see it slightly better than the last quarter, but let's see. I mean, I think it's not fair for me to comment on the current quarter, but from a long-term perspective, as I told you, we are fairly confident. Even in our coatings business, our order book hasn't dramatically shifted, right? It's just a time lag of certain projects that got executed last year this time, which is coming now in October, November. So, it's just a timing issue. I don't see too much of a structural change.
All right. Rajiv, a good conversation. Thank you very much as you continue to execute. Appreciate your time here on CNBC-TV18. Thank you.